president of Blue Line Futures. Bill, thanks for being with us. So what's going on here, in your opinion? What do you surmise is happening? Because we're down about, 40% from the all-time highs. What do you think is happening?
I wouldn't focus on the 40% as being, the main thing here, because Bitcoin is going to be a volatile asset. Let's get that out of the way. But this is just a risk-off move in general, and there's an undertow going on. I think one of the positives here is Bitcoin has tracked the yield of say, the 10-year very well. So with a higher yield, when we get through this risk-off environment, I think that's a positive for Bitcoin. And one thing too is it's more the rate of change in yields right now in the 10-year. So that rate of change is what's encouraging that risk off. Once we get through this 2%, 2.15, whatever that may be, I think that's a positive for Bitcoin. Now, can Bitcoin hold the constructive landscape? And I think 42,500 is a big level.
Okay, so I think you made a lot of very good, interesting points. First of all, people love crypto. Right? I mean, I don't want to squash the crypto trade. I mean, and you could tell us there are people who talk about Bitcoin 100,000. We've seen a lot of optimism surrounding ETFs and looking at the Bitcoin futures and other crypto trades, right? Like Ethereum and Solana and all that. So tell me what you think here in the near term. So you're talking about it's not the rising rates that's the problem. It's how quickly it's happening. And you're right about that, because this start to the jump in rates is the fastest since 2001. So everybody sort of woke up and they got hit with an anvil of these higher rates super fast. So you think it'll be back on, and people really want to adopt cryptocurrency more in life, right?
Absolutely, absolutely. And I'll get to that last point here in a second. First, I do want to say one of our narratives for clients has been, when you get a move of this magnitude in rates in quarter 4 through quarter 1, it's not a 2 or 3 day event. These things are usually prolonged, bigger sort of tectonic shifts. So that right now is taking place. I think there is going to be another surge in yields, and it could cause additional risk off. But to your latter point, is Bitcoin is the way of the future, or crypto is the way of the future. And I think that this Web3 is really what I want to hit on. And Bitcoin may be what everybody focuses on, the price movements there, but there are a lot of places to look at. And I actually don't currently own Bitcoin right now. But I am invested in a number of other cryptos, and I own things like Ethereum and Solana, but I also own things in say, the Metaverse or Web3. Like Decentraland is ticker MANA, is actually green right now and holding a really good support level at $3. It's sort of roughly the 50% of this whole move in Decentraland. And Decentraland is a place where you can buy assets such as land via NFTs in the virtual world. So I think that's something really cool. One that's getting hit right now is Axie Infinity, which is a metaverse game, and that's with the undertow of risk off. But focusing on this metaverse and Web3, there are a lot of opportunities, and something that I'm invested in right now that's launching soon is Metaverse Mining Alliance, and this gives you exposure across a lot of games in Web3. And what they do, it's a team putting together basically a guild, and what they have is exposure across Axie, new games that it's like a Star Alliance Star Atlas that may be launching, and they're managing the risk within those games via treasury and hedging. So I think things like that are great places to be looking at. Now that's via me, and I have a high risk tolerance, but I think as we get through this risk off tone in the markets and pointing back to those yields, I think that's a positive for the entire space.
I'm tempted to ask you for a shocker, because as you're invested, as you said, in Ethereum and Solana, two that I had mentioned earlier, and there's the BitO and Coin, and you could do it through some of the stocks, right, like PayPal or Square or whatever. And people are still looking for Bitcoin to be an important investment going forward. Give me the shocker. I mean, what is like the best case scenario, maybe in the next 6, 12, 18 months?
Well, I mean, the best case scenario here in the near term, I sent you your producers a chart that there's a back test of a trend line from the previous high going back to last year. that right now brings that support at 42,500. Best case scenario, we can hold that, and Bitcoin can start to work higher. I think that other assets like Decentraland and Metaverse Mining Alliance, when that launches, are going, and the Web3 assets are going to outperform Bitcoin here in this new year. So I think that's where the focus is. But Bitcoin is going to have a tough ceiling at 60,000. Once it closes out above, say, 65,000, I think that we could see a move into the 80s very quickly, and 100,000. I don't think that is out of the question. But what it comes down to is holding this constructive groundwork on a technical basis here in the near term.
Right. A couple of other things. I mean, we talked about the high rate environment and the Fed and what we're likely to hear there. So you're more concerned not about the high rates, but when it happens quickly and causes volatility. The strong jobs report could come out tomorrow, or maybe some strong revisions. There are folks who surmise that you could see Bitcoin coming under pressure if we get a really good jobs number. And last but not least, another thing we could talk about are the crooks, because I saw there was a record number of scams or crypto scams, and it amounted to about $14 billion in 2021, which seems low to me, but I did see that stat. What do you say to folks who are worried about the thieves too?
Well, first you mentioned non-farm payroll, and as we've, this environment that the Fed had laid yesterday in their minutes from the previous meeting, and one of the points we've hit on for our clients in the last several weeks is this was a holiday rally. Pinch yourself. When you go into the new year, the focus is going to shift back to the pace of rates and what the Fed's path to tapering and eventually hiking rates is going to be. And right now there's a 70% chance they hike rates in March. A good jobs report is going to increase that probability. So that's the thing that would continue to pressure risk assets as yields make that surge 10-year to 2%. But if we do miss tomorrow, and given the surge in Omicron cases, maybe it does push out the timeline a little bit. Personally, I would rather see the Fed get that lift off, get that first rate hike in March, and I think the markets and risk assets after that will have much more smooth sailing. But shifting over to what you're saying with the crooks, there are things you have to be careful with, and it starts with knowing the web addresses that you're going to. Don't be on Reddit looking for pump and dumps and then clicking links that are going to take you somewhere else. When you do get to some of these coins, you're going to look at using a wallet that's off exchange. And just be careful. Use protection. Make sure you have a safe way of doing things, knowing the web addresses and don't go on public computers. And that's the way first and foremost to avoid scams and crooks, if you will. Yeah. I didn't even know what to call them, but I think you give us some great advice there, Bill. Thank you. Happy New Year. We'll have much to discuss. I can't wait for you to come back and we'll take a look at cryptocurrencies throughout this year. Bill Baruch, President, Blue Line Futures. Thank you.